Before we begin, let's walk through our webinar platform together. Each of the buttons at the bottom of your screen relate to sections in the ON24 console. The speaker view is where you will see our presenters throughout the webinar. The slide view is where you'll see the accompanying slides. Our poll questions will also appear in the slide area. Be sure to click directly on the slide to answer poll questions throughout the webinar. You can resize these widgets for a larger or smaller view. You may follow along also with a PDF version of the slides that can be found in the related content widget. The CPE criteria section details the requirements you must meet to receive full credit for CPE in this session. To obtain CPE, you must do two things. First, be on the live webinar for at least 50 minutes, and second, respond to 3 of the 4 polling questions that will appear throughout the presentation. You can track your viewing progress in the Earn CPE widget on your screen throughout the webinar. By registering for today's event, you will automatically receive an email after 24 hours with a link to download the slides and a link to view the recording. Additionally, if you meet all the criteria and qualify for CPE, a link to your CPE certificate will be in that email as well. Please remember that it does take 24 hours for that email to be automatically generated, so look for it sometime tomorrow afternoon. For CPE-related questions, please reach out to cpe@yptc.com. In the related content section, you can access any accompanying materials for this webinar. This includes a PDF copy of the slides and many times will often include related resources. Reactions from our audience throughout the webinar will float along the console screen. Use the Q&A section to ask questions directly to our speakers throughout the presentation. In the speaker bio section, you can find more about our presenters, including their contact information. If you need technical assistance, please use the help button below. Many times, technical issues can be resolved by opening the webinar in Google Chrome or refreshing your browser. Finally, the evaluation button contains our post-webinar evaluation survey. Here is where you can share your commentary and feedback on the presentation. We hope you enjoy our free webinar. Now, let's get into today's topic.
Welcome everybody to today's webinar, Ask Better, Lead Better. We're so glad you could join us today. Let's take a moment to introduce ourselves before we dive in. My name's Andrew Miller, and I'm the director of our Houston market at YPTC, also encompassing the Central Texas area. So thinking ahead to today's topic, I am by nature a consensus builder, and specifically to this topic, I've seen organizations bring about transformational change just by asking and answering the right questions. One question that I wish more leaders would ask is, what will we do if we don't meet our budget? I feel like this question can help nonprofits avoid an unintended deficit at year end.
That's a great question, Andrew. And my name is Barbara Enright, and I'm the director of our Dallas, Fort Worth, and North Texas market at YPTC. This topic is important to me because I've seen so many situations where one good question completely changed the direction of a conversation and led to a better outcome. One question I wish more leaders would ask finance is, what matters most? It's easy to get bogged down in the details and individual variances, but sometimes the most valuable conversations come from zooming out and looking at the big picture. What are the key takeaways? What does it mean for our mission? And what, if anything, needs our attention?
I love that question, Barbara. What matters most? And speaking of zooming out, let's share a little bit about YPTC. So your part-time controller is a professional services firm that has specialized in nonprofit financial management for more than 3 decades. Our whole goal is simple: to help our clients sleep at night. We do this as fractional CFOs, interim controllers, and part-time accountants supporting financial reporting, forecasting, budgeting, data visualization, and best practices, just to name a few. Today, that's more than 800 staff members supporting over 2,000 clients across 13 regional offices and remotely throughout the United States. Over those 3 decades, we've had a front row seat to what separates organizations that thrive from those that struggle. A lot of times it comes down to this. We've seen which questions lead to strong decisions and which questions often aren't being asked at all. This webinar will provide a glimpse into that insight. And before we get into the content, just a few housekeeping items from the video that played at the start of the session. First, we'll be using poll questions for CPE today. You can track your own progress inside the Earn CPE widget on your screen, so keep an eye on it as we go. Second, and most importantly, we want to hear from you. So use the Q&A widget to submit any questions, and we'll try to weave them in as we go. If we don't get to your questions live, don't worry. We'll stay on for up to 15 minutes at the top of the hour to answer anything we didn't reach. Please note that the additional Q&A time will not count towards CPE. And here's at the heart of what we're doing today. Every nonprofit leader makes financial decisions, whether they consider themselves a finance person or not. Today's session isn't about turning everyone into an accountant. Trust me, Barbara and I want job security. It's about asking better questions so all of us can make better decisions. So our purpose today is to help leaders and finance teams turn financial conversations into mission-aligned decisions. We'll do this through our learning objectives, which are identify key financial questions nonprofit leaders and finance teams can ask to support mission-aligned decision-making. And we'll also apply questioning techniques that improve collaboration between finance and operational leaders and lead to more informed management decisions. So as you listen and engage today, I'd invite you to hold on to one thing in the back of your mind. What's one financial conversation your organization needs to improve? Keep that in view, and we'll come back to it. Here's where we're headed over the next hour. First, we'll explore why financial questions often feel uncomfortable and why asking them anyways is one of the most important leadership skills there is. Next, we'll talk about what nonprofit leaders can reasonably expect from their finance teams and what finance teams can be prepared to explain in return. Then we'll walk through a practical framework, 6 areas where the right questions can strengthen decision-making, planning, and communication. And finally, we'll look at what these questions reveal and share simple next steps you can take right back to your organization on Monday morning. We're going to start with why questions matter, but first we have a poll question. What financial question feels hardest to ask in a leadership or board setting? A, can we trust these numbers yet? B, what changed from budget to forecast? C, what risk should we be discussing? D, what happens if funding is cut or delayed? Or E, I'm not sure what to ask. So Barbara, here I think about what happens if funding is cut or delayed. It can feel like you're being a pessimist, but it's a proactive question and looking out for the best interest of the organization. I always remember the greater good, the mission. What do you think?
Yeah, following in that same vein, I think about what risks should we be discussing? It can be a hard one. I think because there's so much unknown in the future, it can feel uncomfortable to raise questions about risks that may never happen, but those conversations help organizations be prepared for when challenges do rise.
That's great, Barbara. So it looks like we have about 80% submissions for the poll question. Get those in the next few seconds if you need to. All right, and we'll move on. So it looks like the top answer was at 40%. What happens if funding is cut or delayed? That makes a lot of sense. And 27% was what risk should we be discussing? That's a great question too. So this is our first section, why questions matter. The big idea to plan here is simple. Strong organizations don't just have good finance teams, they have leaders and finance partners who know how to ask, answer, and act on the right questions. That's a partnership. And it's a skill set, not a personality type. So let's take an introspective look here and make it personal for a second. Think about a meeting you've been in where you wanted clarification on a number, but you didn't ask. Maybe it didn't feel like the right moment. Maybe you didn't want to feel like the only person in the room who didn't get it. I know I've been there. What made it feel uncomfortable? Feel free to share in the Q&A widget. So for me, I can remember several instances where the development team was excited about raising significant funds at the organization I was working with. They expected to be collecting those funds in the future. However, the organization was struggling to meet short-term cash needs. It felt uncomfortable, but it was my duty to draw their attention to the cash flow challenges at hand while still acknowledging the development team's efforts. What about you, Barbara?
Yeah, that was a great example. I've sometimes felt uncomfortable asking a hard question because I didn't want the other person to feel challenged or criticized. During one budget process, development projected that they would hire 2 additional staff members in the new year. And as a result, annual contribution revenue would double. I was worried that the development leader might take offense if I questioned her reasoning, but I did in the end ask what her assumptions were and if that was a realistic goal. In her calculation, she had assumed that both hires would start immediately on January 1st and begin generating revenue on day 1. Not very realistic. But rather than being offended, she appreciated the question because it helped her set realistic expectations and set her department up for success in the new year.
That's great, Barbara. Leading into that discomfort and through it, and then realizing on the other side that they really appreciated the question that you asked. We'll talk a little bit more about that. So here's the reframe I want everybody to walk away with. Strong organizations don't just have good finance teams. They have leaders that know what to ask, finance teams who know how to explain, and a shared commitment to using financial insight in service of their mission. Think about how many nonprofit decisions actually rely on financial insight, even when they don't feel financial at first. Think about staffing and programs. Think about fundraising and grants, reserves and technology, and even growth and sustainability. Almost all of them, right? The challenge is that leaders don't always know what to ask, and finance teams, they don't always know what level of detail or context that leaders need. That gap is where things get lost. So let's name it clearly. Asking questions is not a sign of weakness. It's a leadership practice. And yes, for a lot of us, asking financial questions means stepping outside of our comfort zone. That discomfort can be normal. It might be a fear of sounding uninformed, a fear of slowing down a meeting, fear of challenging a colleague, or a fear of what the answer might actually be. The way through it is to reconnect with the bigger picture and purpose. Questions help protect the mission, steward resources, and support better decisions for the people and communities that we serve. Let's talk about that comfort zone because it's worth being honest about. It's easy and safe to stay where we're comfortable, but what's the real cost of staying there? Oftentimes, it can be enormous. It could be missed growth, missed opportunity, and ultimately less impact for the people that we serve. The risk of not asking is real, even when it's invisible. So what does it actually take to leave the comfort zone? It takes a few things: courage, humility, a willingness to be wrong, a willingness to be perceived as wrong, and above all, it takes curiosity. Curiosity isn't a detour from leadership. It's at the core of leadership. And applying curiosity moves us into the learning zone, where we're able to open up and asking, listening, and learning. And from there, we move into the growth zone. And being in the growth zone helps everyone, not just us. And once you reach the growth zone, that formerly uncomfortable topic begins to become part of your comfort zone now. So think about it. Where do you spend most of your time? And how could you maybe change that? So I remember when I became executive director of a nonprofit organization, and as a smaller organization, we didn't have a development department. Does that sound familiar to some of you? I bet it does. So it was on me to build new relationships, and more specifically, I had to ask for money. It was uncomfortable at first, but honestly, the more no's I got, the easier it was. And I began to get yeses, and that helped me build my confidence even more. The quicker we can push through that learning and growth zone, the easier it gets.
Now we shift into our second section, moving from financial information to shared expectations. I often see finance teams operating in a silo, but I love seeing what happens when finance, leadership, development, and program teams truly partner with each other. Those conversations and questions help organizations think more strategically, make better decisions, and ultimately create a greater impact on their mission. Both finance teams and non-finance leaders have a real role in making financial information useful, timely, and actionable, but they come at it from different angles with different priorities. Our finance teams have a specific accountable view. They care about accuracy, completeness, documentation, and compliance, and rightly so. Meanwhile, the rest of the organization is often looking at the bigger picture, focused on clarity, speed, decisions, and strategy. Neither view is wrong. In fact, there's a valuable middle ground between them, a place to meet and find balance. One example I see frequently is tension between development and finance around revenue reporting. Usually finance is looking at GAAP revenue, while development may be tracking fundraising progress as cash received in the current year, historical and future pledges, or some combination of both. The breakthrough happens when both teams take the time to understand each other's goals and clearly communicate those differences to leadership and the board. Once everyone is speaking the same language, the conversation shifts from who's right to what are these numbers telling us? This session is about clarifying what leaders can ask and what finance teams can be prepared to explain. For non-finance leaders, these questions clarify what support and insight you can expect from a finance function. For finance leaders, they work like a communication checklist, a gold standard for what a well-functioning finance team should be able to help answer. So what actually bridges these two perspectives? A shared mission. There's very little that unites people more powerfully than a common purpose. When priorities seem to conflict, the best move is to come back to the reason you're all in the room in the first place. Losing sight of that is actually an organizational red flag. Nonprofits exist because of their service and their greater purpose. That's the heart of this topic. At the end of the day, people don't come to work because they love budgets, fundraising reports, or performance metrics. They come because they care about the mission and want the organization to succeed. At YPTC, our mission is clear and it unites us across every region. We exist to make nonprofits stronger. Every organization has a reason it exists, a core ideology that must be preserved over time, no matter what. Everything else can and should evolve with the times. When everyone's primary focus is on the shared mission, questions become a tool for learning rather than a source of tension. That means the way we ask them can either strengthen the conversation or unintentionally make it harder to have an open discussion. So before we get into the questions themselves, let's talk about how you ask, because the delivery matters as much as the wording. Not every question has to be asked live, out loud, in a meeting. That's actually the hardest format for everyone involved. Sending questions ahead of a meeting gives your finance team time to research so they can give you a better answer. When I was a CFO at a nonprofit organization, I worked with a great finance committee. I would send the financial reports about a week before the meeting, and each member of the committee sent me any questions they had beforehand. This allowed me to not only be prepared with answers, but also understand what was top of mind for the committee and where they wanted to spend time during the meeting. I remember one month being surprised when a committee member asked me several questions about our cybersecurity insurance. Had those questions come up live, I wouldn't have had the information he was looking for. Instead, I had time to connect with our ED, the IT team, and controller, so I could provide a meaningful answer. As it turns out, his own organization had recently experienced an attempted cyber attack, so that was top of mind for him, and he wanted to make sure we were adequately protected as well. Written questions can do the same thing, and they create a record you can both return to. A standing form or template, even 4 or 5 recurring questions, turns, "Why are you asking me this?" into, "This is just what we do every month." And when you do ask live, a softer entry point helps. "Help me understand this variant," lands very differently from, "Why is this number wrong?" Same question, completely different conversation. And remember, the room matters. A question that feels easy to answer in a one-on-one conversation can feel much harder in front of a full board. Before you ask, consider where you'll get the most thoughtful and honest response. Sometimes the best way to improve the conversation isn't changing the question at all. It's choosing a different setting for it. Now let's shift perspectives and look at it from the standpoint of the person receiving that question. It can be scary to feel like you'll be asked something you don't have the answer to. So here's a reframe. I don't know is not a failure. I don't know, but I'll find out is a completely professional, completely credible answer. What can damage trust is guessing, or worse, sounding confident about a number that turns out to be wrong. The key is to always pair the honest answer with a commitment. Who will find out and by when? Let me verify and follow up Friday closes the loop. And remember what we said earlier about preliminary versus final numbers. That's preliminary, I'll confirm after close. It's often the most accurate answer in the room. Sometimes you do know part of the answer, just not all of it. In those situations, it's okay to separate what you know from what you're still researching. Saying, here's what I can tell you now, and here's what I'm still checking, is transparent and builds credibility because people understand exactly where things stand. And don't be afraid to buy yourself a little time when you need it. A good question often deserves more than an off-the-cuff answer. That's a great question. Can I bring that back next meeting? Shows you're taking the question seriously and want to provide the most accurate information possible. Andrew, I think you had an example of when you didn't have all the answers.
Yeah, I sure did. I probably have lots of examples of that. So my first experience as an executive director, it was an environmental organization closely related to the city. So the city manager wanted to meet with me on my second week on the job, which was a little nerve-wracking in and of itself. And whenever we sat down, he asked if we would be willing to take over the city's recycling center, although it sounded like he was telling me that's what was going to happen. So my head immediately started spinning, thinking about all the added stress and lots of questions that I had. So I paused for a second and I told him I need to consult with my board. The long and the short of it is that after a ton of consultation and contract negotiations, which are things that I hadn't done before, we walked away with a contract that funded office space for our team, as well as operational expenses for the next couple years. I'm happy to say that recycling center is still in operation today, and it became a great public awareness channel for our nonprofit. So I didn't blindly accept their offer or say no thank you because it was outside of my comfort zone, and that made a huge difference to the overall success of the organization.
Thanks for sharing that, Andrew. Now we're into the heart of our session, the question framework, and how it creates clarity. We've already discussed the why and the shared purpose, so now let's walk through the actual questions, the ones leaders and finance teams can use together to assess whether their financial information is genuinely supporting the mission. We've organized the questions and expectations into 6 main areas where financial information can directly create clarity. We're going to walk through each one the same way. The questions leaders can ask, what finance teams can be prepared to explain, and a practical example to make it real. Up next, we'll be discussing questions involving the financial foundation, financial reporting and insight, budgeting and resource alignment, forecasting and decision-making, grant and funder stewardship, and audit, governance, and financial communication. The first area we'll be covering is the financial foundation, accounting, month-end close, policies, procedures, the basics. Before leaders can make strong decisions, they need confidence that their financial information is accurate, timely, complete, and supported by clear processes. This foundation underpins everything else. The core question is really just, can we trust the systems, processes, and numbers we rely on? Let's give an example of a simple question leadership could ask. Are the numbers accurate, complete, and final? For the finance team, that breaks down into, are our books closed on a consistent timeline each month? Are there any accounts, transactions, or adjustments that need leadership attention? And what information is still missing, delayed, or dependent on other teams? Keep in mind that correct often isn't really the problem. Timing is. The numbers are often accurate, but simply not final yet, or they're waiting on one last reconciliation or a report from another team. A consistent close calendar is what lets leaders trust that when the numbers land, they're done. On the other side of that conversation, here's what a well-functioning finance team can be prepared to explain: the month-end close timeline and what has happened before reports are reliable, the difference between preliminary and finalized numbers, any recurring bottlenecks or documentation gaps, and how reconciliations, allocations, and journal entries affect accuracy. One place this often shows up is around the question of whether financial information is ready to be used for decision-making. Finance may understand the caveats and outstanding items, but leadership and board members may not realize how much those details can affect the final picture. Let me give you a real-world example. A board member might see a surplus on a report and assume the organization is having a strong year. Finance, meanwhile, may know there are still significant adjustments being evaluated. That's where asking whether the numbers are final becomes just as important as asking what the numbers are. In one organization I worked with, this exact situation came up during the year-end close process. Board meeting deadlines meant leadership was reviewing preliminary numbers before all year-end adjustments were complete. The organization relied heavily on workplace giving as a revenue stream. During the year-end review, the organization discovered that some pledge donations were no longer collectible due to employee turnover and changes in giving elections. After the receivables were evaluated, revenue was adjusted just downward enough to turn what appeared to be a surplus into a deficit. That's why it's important to ask not just what the numbers are, but whether the numbers are final. And up next, we have our next poll question. How confident are you that your monthly financial numbers are final and decision ready? A, very. We know and trust the close calendar. B, mostly, but I usually have to ask. C, it depends on the month. D, rarely. We're often working with preliminary numbers. Or E, I'm not sure what final means for us. And don't worry, we won't share your answers with your finance team. We'll give everyone a few moments to respond, but I also want to add a comment here. The audited financial statements are really the final numbers. It's important to be talking with your finance team through the end of the year about what final means for monthly reporting. As long as the numbers are materially accurate, you should be able to reasonably rely on the monthly numbers. Sometimes organizations expect monthly reports to have the same level of certainty as an audit, and that's just not realistic. The better conversation is, what has been closed? What is still estimated? And are these numbers ready for the decisions we need to make today? Looks like we're still waiting for a few people. So I was going to go back. I saw some great answers of why it could be difficult to answer questions. Someone in the chat said, it felt like I was the only one with questions and didn't want to take up time for just me. I felt that before, for sure. Another person said, posing questions or identifying risk to some seems suspicious or non-trusting. That can definitely happen. It's definitely a fear when you're coming into that. And then someone also mentioned no one else asking questions or given time to ask questions. That's true. Sometimes there just isn't even the time given to ask the questions. Those are all some really good examples. All right, so 45% of people said very. We know and trust the closed calendar. That's great. 24% said mostly, but I usually have to ask. And then 18% said it depends on the month. The second area we'll be covering is financial reporting, insight, and visualization. Financial reports can and should do far more than show numbers. A well-functioning finance team interprets the information, connects it to organizational priorities, recommends options, and presents data in a way leaders can actually understand and use. Let's walk through a simple question again that leaders can ask, like, what's the most important thing I need to know? The finance team might interpret that as, what are the most important takeaways from this month's financial report? What changed compared to budget, forecast, or prior period? And which variances are expected versus which ones require action? I especially love that last question. Not every variance requires action. I've seen organizations receive unexpected grant funding that increased both revenue and program expense beyond budget. The spending variance looks significant on paper, but it was fully funded and aligned with the organization's goals. So it didn't require corrective action, just an explanation. And here's what a strong finance team can be prepared to explain in return: the story behind the numbers. That means being able to explain key trends, variances, and risks, but also clearly showing leadership the big picture. Whether the organization is on track financially and key items leadership should be focusing on to advance their strategic priorities. The theme here is narrative. Numbers on a page don't drive action. The story behind them does. Andrew, I think you have something you want to mention about this slide.
Yes, I wanted to highlight here that I think this is a huge opportunity for leaders. Sometimes the finance team, they look at the reports so often that they can miss key details. Having a fresh set of eyes from leadership or the board and asking good questions is a great control measure.
That's a great insight, Andrew. A team often receives a detailed financial packet, but it isn't sure what to focus on. It's just a lot of numbers on a lot of pages. I was on the board of a nonprofit, and the financial report we received was 24 pages long. And this was a pretty straightforward, mid-sized organization with only one program. There was so much detail that even after poring over all the reports, I still had no idea if the organization was actually in a good or bad financial position. I actually ended up having to get out my calculator and total several numbers across all those pages just to determine net income. The P&L example we're sharing here is definitely better than my example report or a simple system-generated report. It includes favorable and unfavorable variances, but it doesn't explain the why behind those variances. How can we make this even clearer for our audience? Imagine if this is what your team actually saw when they opened the financial packet: clear, visual, and immediately telling them where to look. A good executive summary should help the reader know where to look first. If someone reads nothing, and let's be honest, we all know that happens, they should still walk away knowing what's going well, what needs attention, and what decisions may be needed. Here, it's very clear that the organization's net income is trending slightly better than the budget. Also notice how the short bullets and bolding make this easier to absorb. The reader does not have to dig for the important information. The page is guiding them to it. The spring benefit brought in $25K less than expected. Then it also includes the why. Attendance was less due to the storm. And then it provides an update. We've applied for a $20,000 grant and when to expect an update on that grant.
So our next two areas are budgeting and forecasting. So I want to take a moment to explain some of the differences between these three tools, which oftentimes people lump together. We have cash management, budgeting, and forecasting. They're related, but they answer different questions. This comparison table of the purpose, focus, approach, time horizon, and outcomes of each of these tools will help set us up for the next two areas. Cash management is about organizational sustainability and cash availability day to day. Budgeting sets the roadmap for the fiscal year and what's needed to sustain core activities. Forecasting predicts the most likely outcome over the short to medium term. Used together, they give you the full picture. If you want to go deeper here, check out our resource, Cash's Mission, a webinar from YPTC that is linked in the related content widget and on our website. So our third area is budgeting and resource alignment. A budget is not just a financial document, it's a plan for how the organization intends to use its resources to advance the mission. Strong budgeting connects program goals, staffing needs, funding realities, and strategic priorities all into one picture. So when a leader asks, how confident are we in our budget? That's really three questions to the finance team. Does the budget reflect our current strategy and priorities? Are revenue and assumptions supported by historical data or confirmed funding? And what's not included in the budget that could affect our ability to deliver on the mission? A quick reminder that the budget is meant to be a static plan. We set it and then we measure against it. Some organizations will assess and amend the budget at some point during the year. We will also talk in a minute about forecasting, which is closely related. And note that in smaller organizations, the budget process is lighter. As you grow, the collaboration and scope increases. Here's an insight worth sharing. Confidence in a budget almost always comes down to the revenue line. Expenses are largely within your control, but if revenue assumptions are built on hope rather than history or confirmed commitments, that's where budgets tend to fall apart. So our fourth area is forecasting and decision planning. Financial reports tell leaders what has already happened. Forecasting and scenario planning, that helps leaders look ahead. And that's especially critical during uncertainty, revenue shifts, delayed funding, growth, or major strategic decisions. The core question here is, what are we expecting next month, next quarter, or even next year? For the finance team, that breaks down into, what does our cash position look like throughout the rest of the year? What assumptions are built into the forecast, and do any need to be updated? And what happens if funding is delayed, reduced, or even restricted? Unlike the budget, the forecast is a dynamic tool, continuously updated with current assumptions and knowledge, and ideally, it's revisited every month. The insight I'd leave you with here is that forecasting isn't about predicting a future perfectly. It's about spotting a cash crunch early enough that you still have options. By the time a shortfall shows up in the actuals, most of your choices are already gone. On the finance side of budgeting and forecasting, here's what your team can be prepared to explain. How the budget or forecast was actually built and what assumptions went into it, where leadership input is still needed, which assumptions are the more sensitive and uncertain, whether the budget is realistic, balanced, and mission aligned, and how it will be monitored and updated throughout the year. That last point really matters. The budget rolls into your forecast, and the forecast is a living tool that you monitor and update throughout the year. Barbara, have you had a time where the budget needed updating?
Absolutely. One budget assumption that turned out to be way off involved a nonprofit I worked with that built homes. When we developed the budget, we assumed construction costs would increase only modestly from the prior year. Then inflation hit, and the cost of materials, especially lumber, increased far more than anyone expected. We revisited the forecast mid-year and had to adjust not only the cost of each home, but also our cash flow projections. It was a good reminder that the purpose of a forecast is not to defend the budget, it's to respond to reality.
That's a great point. Respond to reality. So it's a reminder to be agile and respond to change quickly. Let's check out our next poll question. Which cash management or planning tool is most underused in your organization? A, an annual budget. B, rolling forecast. C, scenario planning. D, we use all these tools. Great job. E, we don't use any of these tools. That's okay. So we'll give you a few minutes or a few seconds to go ahead and respond to this. Even though your organization may use all these tools, think about which one is most underused, maybe where you can make some meaningful improvement. Barbara, I've seen countless organizations who hadn't benefited from a rolling forecast until they partnered with YPTC. Once our clients see it and begin to understand the value, I feel like it can be a game changer. What about you?
I agree with that, Andrew. The rolling cash forecast can be a really powerful tool. And an offshoot of that is scenario planning. When organizations are facing uncertainty, it can be incredibly powerful to look at the blue sky, gray sky, and dark sky scenarios to help with decision making.
That's a great point. All right, so it looks like most people chose scenario planning. about 45%, then rolling forecast. Great information.
Our fifth area is grant and funder stewardship. Grant funding almost always comes with strings attached: restrictions, reporting requirements, reimbursement timelines, and compliance expectations. And strong grant management only works when finance, development, programs, and leadership are coordinated. So when a leader asks, what can we use these funds for? The finance team is really thinking, does the proposed budget reflect the true cost of the program? What restrictions or reporting requirements come with this funding? And are reimbursement-based grants creating cash flow pressure? And here's what your finance team can be prepared to explain: whether grant budgets are realistic and aligned with the program, how grant funds will be recorded and reported, and what documentation is needed to support grant expenses. How will the restrictions affect spending flexibility, and where compliance, timing, or reimbursement risks might come up. The through line here is no surprises. Good grant management means you see the risks before the funder does. Shortly after onboarding a new client, our team was helping to prepare several grant reports that were coming due. That's when we discovered that a number of the grant budgets had been written using specific employee names rather than job titles. As is often the case, there was staff turnover and several staff members had changed roles over the grant period. The organization ended up having to submit multiple budget modifications and wait for funder approval before they could close out the grant and release the restrictions. It was fixable, but it created a lot of extra work. And it's exactly the kind of issue a quick finance review during the application stage can help prevent. Our sixth and final area is audit, governance, and financial communication. Audit readiness is not an annual scramble, at least it shouldn't be. It reflects the strength of your financial records, documentation, processes, internal controls, and governance communication all year long. So when a leader asks, are we ready for the audit? The finance team might interpret that as, are we prepared for the audit timeline? Are there unresolved accounting issues or documentation gaps? And where have auditors raised concerns in prior years? On the finance side, here's what your team can walk leadership through: the logistics, the audit prep timeline, the role leadership and departments outside of finance need to play, and how management can support a smooth process. The documentation, what's ready and what's still needed. The findings, any known issues that could create delays or findings. And the lessons learned, what this year's audit should teach us to improve next year. The last piece is the one organizations skip most. Treat every audit as a source of process improvement, not just a compliance exercise. At one organization we worked with, the prior year audit showed that some donor restrictions had not been released in a timely manner because the program and finance team weren't communicating regularly. Leadership established quarterly meetings between the two teams to review restricted funding and any upcoming reporting requirements. As a result, there were no similar findings during the following audit, and both teams came to really appreciate the meetings because they helped prevent surprises and kept everyone aligned.
So this is our final section, from questions to partnership. With all of these questions, what all of these questions actually reveal. And speaking of questions, remember, we'll stay on to answer any questions that have been coming in that we didn't get into yet. Thanks for your patience. That brings us to our final poll question. What most often gets in the way of better financial conversations at your organization? A, timing. Accurate numbers arrive too late. B, clarity. The reports are hard to interpret. C, capacity. Nobody has the bandwidth to dig in. Comfort. People hesitate to ask. And E, alignment. Finance and program teams aren't connected. What do you think, Barbara?
You know, so many of our clients come to us because they aren't getting timely financial reporting. But what they really need beyond timely information is clarity. They need to know what the numbers are and what they mean so that they can make better decisions. What about you?
Yeah, that's a great point. You know, I think about comfort or even complacency at times, but I've seen just how one simple question can open the door to a worthwhile discussion. All right, waiting on a few more responses here. I think I had, so one person said our leadership team has different experiences with reading financial reports. One challenge I'm having is getting us to a similar level so our overview conversations can be more useful for all of us. You know, I think this points back to making sure to have education and training as part of your board or leadership training, and especially making sure that it covers financials as well. So providing that additional education and training, maybe having an outside consultant come in, I think is a great way to handle what you're talking about there. So what most often gets in the way of better financial conversations at your organization? It's pretty split. So the majority here was capacity. Nobody has the bandwidth to dig in. Barbara, I don't know about you, but that sounds very familiar, that everybody's got a lot going on. Everybody's wearing multiple hats at nonprofits. So that makes a lot of sense. So here's the key insight of the whole session. Questions reveal expectations. These questions are not a test of whether someone knows finance. They're a tool for clarifying what the organization needs from its finance function. If leaders can't get clear answers, that usually reveals that usually reveals a gap. It could be a communication gap, a process gap, staffing, technology, or even an expectations gap. And if finance teams are never asked these questions, they may never get the chance to respond and provide the insight that leaders actually need. So a well-functioning finance team isn't just accurate, it's communicative, forward-looking, and connected to the mission. And a well-functioning leadership team doesn't avoid financial discomfort. It uses curiosity to move towards clarity. The shared goal here is not perfection, it's alignment. It's not about knowing everything, it's about knowing what to ask next. So how do you actually put this into work? Start with where you are. This slide will give you 5 simple moves. First, name the gap. Is it a process gap, people gap, technology gap, timing gap, or even a communication gap? Naming it is half the battle. Next, prioritize one question. Please don't try to fix everything, reporting, budgeting, forecasting, grant, or audit process all at once. Trust me, your finance teams will thank you. That's how people burn out. Third, create a shared expectation. Decide who owns the answer, when it'll be available, and what level of detail is needed. Fourth, document the next repeatable step. Could be a checklist, a calendar, a dashboard, a summary, or even a recurring meeting that can create immediate progress. And fifth, revisit it regularly. Treat finance clarity as a practice, not a one-time project. My suggestion is to pick one question you have and start with understanding why this question matters to your organization. So let's land the key takeaways. Asking questions may require leaving our comfort zone, but that discomfort is part of responsible leadership. Connecting those questions to the mission is what reduces fear. It also reduces resistance and even defensiveness. And the strongest finance partnerships are the ones that clarify expectations. They also surface risk early and help leaders make better decisions. Here's the bigger picture. Your finance team doesn't just report on the past. At its best, finance helps you understand the present, prepare for the future, and make decisions that protect and advance the mission. But that partnership, it only works when both sides are willing to ask better questions, answer them clearly, and stay connected to the bigger purpose behind the numbers. So here's our ask of you. Choose one question from today's session Bring it back to your next finance, leadership, or board conversation. Use it not to challenge, but to clarify, not to prove what you know, but to strengthen the decisions your mission depends on.
As a reminder, here's a summary of the key questions we looked at today. The financial foundation. Do we know that the numbers are final each month? Financial reporting and insight. What are the most important takeaways from this month's report? Budgeting and resource alignment. Does our budget match what we say matters most? Forecasting and decision planning. What will we do if we don't meet the budget? Grant and funder stewardship. What restrictions or reporting requirements come with this funding? Audit, governance, and financial communication. What did we learn, and what are we changing because of it? Take this with you, download the slides from the related content widget, and share it with your team. Before we move to the Q&A, a few resources worth bookmarking. Everything we referenced today lives in our library of YPTC national webinars, including From Noise to Narrative on turning dense reports into clear stories, and Cash's mission on cash management. These are great to share with your board and finance teams. As mentioned earlier, you can find these resources in the related content widget or on our website. Thank you all so much for being here today. We really appreciate your time and your questions. I know it's near the top of the hour and some of you may need to log off, but as we mentioned, we'll be staying on an additional 15 minutes to answer any questions that have come in.
Yes, definitely. Thank you all for joining us today. We will stay on to look at some of the questions that have just come in and walk through some of those. One thing that, Barbara, that I noticed in the comment sections is, or the Q&A widget, is that people were talking about how their board is hesitant to ask questions. They just don't ask a lot of questions. So I think from a finance team perspective, something that's important to do is encourage those questions. And one thing you can do is, maybe plan a few questions with some of the board members or leadership teams ahead of time. And that, number one, it gives you you already have the answer because you gave the question, but it also starts to encourage in a real life setting for people to ask questions.
That's great. Let's see, another question that came in. You mentioned creating budgets with job titles instead of names, but then how do you know which staff members to assign to which grant for timekeeping purposes? That's a great question. Basically, in terms of the budget that you're giving to your funder, you'll want to say Director of Program A, making $60,000. But internally, you know the Director of Program A is Jennifer, and so that's who you're going to be applying. But if Jennifer leaves or changes positions and Molly comes in, you haven't been outside of your budget. That's kind of quick, easy way to be able to do it.
And I see another question here. Does the board have responsibility? I lost it. Does the board have responsibility in annual financial audit? Meaning the board, do they need to be part of the annual audit committee? It is common for organizations to have an audit committee and board members with their fiduciary responsibility to the organization do need to review, at the very least, review the 990 and the audited financial statements and provide that in a meeting to ask questions. Sometimes audit partners will come and present those audited financials as well, and they'll be able to answer questions. So short answer is yes.
Another question is, my organization is very dynamic, and we often utilize rapid response funding to aid in our dynamic programming. Can you speak more on rolling forecasts? Sure. So like we mentioned, that Cash's mission has some really good examples of this, but in general, you'll start off your fiscal year with current year month and then the budget, normally split out by 12 or however you formed your budget. Every month, you're going to talk to all the people who have input. So talking to development, talking to the program head, talking to controller, anything, making sure you see what's happening next, and then updating those numbers to forecast. The numbers won't be perfect, they never are, but it's giving that best guess. So for example, if I worked with an organization that sold homes, I'd talk to the home buyer services. Hey, how many homes we projected we were going to sell to this month? Are you still thinking that? And sometimes we're revising those numbers up and down into the future. And it's really best to do it at least on a quarterly basis, but monthly can get you the most bang for your buck.
And I see here another question. Can you explain scenario planning and how it is used in budget planning? This is a really good question, a great question. So scenario planning is the way I would explain an example of it is if you applied for some different grants, some new grants, and scenario planning can actually help in your budgeting process. You'll have your operating budget of what you realistically expect, as well as maybe some scenarios for if we get this funding, here's how we're going to staff and resource those grants versus if we don't, what are we going to cut out of our budget? And so I think using scenario planning in budget planning is really important. Additionally, I'll just share an example. Whenever I became CFO for a nonprofit organization, I found out after I joined that they had gotten they applied for 3 federal grants thinking they would only get 1. They got all 3. So we had to jump in and really understand how are we going to staff and resource all these grants and meet all the targets that were needing to be met.
Okay. As a finance committee member, how do I ask strong questions without getting too much into the detail of how? Since I'm an accounting professional, I feel like I'm asking detailed questions instead of oversight styled questions. That's a great question. Finance meetings can quickly devolve into, what exactly went into office supplies and why is it $10 over, what we expected. So I think really asking the question to them that we talked about is what matters most can really help them be able to hone in on, oh yeah, hey, there's this variance going on, or we're worried about cash running out. But the finance team should be able to answer what's the big picture, most important item. I also say you can ask about individual variances, but try to keep to the large variances. Sometimes, computer supplies went up or down by 3% isn't really material. And so making sure you're really only honing in on those big variances.
This is a little closely related to another one that I answered. It says, isn't it a requirement that all board members have strong financial understanding of the agency's financial situation? I don't know if it's a requirement. It should be. I think the answer is it should be a requirement. However, I think that is something that the board or the organization itself should really be screening for and helping to educate the board members on. Usually you talk about a board member orientation for new board members. I think it's also important to provide an annual retreat where maybe you're planning out, reviewing your long-term vision for the organization and providing, key details that the board members will need to know. So not necessarily a requirement, but it should be, and it's definitely something that an organization should be ready to educate board members on.
Another question. Oh, before we get to that, I know we're really at the top of the hour now, so I want to say a warm thank you to all of you who joined us. If you need to take off, as we said, we'll still be staying on for a few more questions and answers, so feel free to please keep putting them in. But thank you to all of you who came and saw us today. We hope you'll join us for our webinar next month, or check out some of our past webinars on yptc.com. The next question I was going to go over is someone asked, any advice on getting the company to begin utilizing scenario planning? I think this is one of those we're just asking, and maybe by asking some of those thought-provoking questions, like Andrew's example, where we applied for 3 grants. What happens if we get all 3? What happens if we get 0? Could we look at that? And that really gets the finance team thinking, and digging in on what would change. Okay, if we got 3 grants, then we might have to add staff, or might have to, hire contractors. And so I think just asking the questions, but guiding them to what you're looking for is a great way to get them to start looking at scenario planning.
All right, looking through the questions here to see if I see any others.
Oh, here, I see one more. What if the recipient of one of those responses pushes back and demands an answer immediately? Oof, that would not feel good. I think, again, being very clear that you do not want to give them incorrect information. You want to make sure that you're giving them accurate information to help them, understand what they're looking at, and that, again, I will go back and look at this and have an answer for you tomorrow, or I'll email you, an hour after this meeting once I've had a moment to look into it or speak to somebody. And so I think just continuing to say, I'm doing this for you, basically. I want to give you the most accurate information.
And I see another one here. Are there any questions that you recommend board ask as a standard practice about financial statements? I think we covered this and Barbara covered it well. She, one of the questions she talked about was, what is the most important thing that I should be looking at on the financial statements? I think that's a very good, well-rounded question, and a good finance team should be able to point you to, hey, here's the key areas that we should be reviewing together and talking about and asking questions on. Another thing that can be recommended is that they create an executive summary or a memo to help explain what are the key areas. So I would just leave you with that question. I think that's a great one to ask, as well as if you just see any, anything that looks, alarming or just like it doesn't look right. I think that's a great area to dig into and just ask a question. Hey, I see this area looks like it's a big variance from last year. Can you talk to me about that? Leave it open-ended and let them explain that to you.
Great. I see one that's great about asking auditors questions. So what questions can we ask the auditors regarding key factors in the audit? Biggest concern I see is that the price seems to go up every year. I can't help you on the second one. I think that's kind of going around everywhere. But it's great to have a pre-audit meeting and ask the auditors a few things. I think asking them what went right last year and what went wrong, what can we be doing better? And then also asking them, what's changed this year? There's constantly new accounting guidance coming out, and your team just may not be aware of it. And so if they can tell you, hey, this thing changed and now we're accounting for it this way, here's the information on it, then you can get ahead of having those adjustments by putting them in ahead of time. So I think those are a few questions to always ask.
And I've got a big question here. What is the best financial advice you can give to start up a nonprofit? I think that is a multifaceted, big question. I think the best thing that you can do, number one, is just realize that starting a nonprofit, just like starting a business, is a huge responsibility. Additionally, you should realize that you're going to be competing with other similar nonprofits for funding, for donors, in contributions. So just understand that, starting a nonprofit is a big responsibility. My first, and I get this question a lot. Hey, I want to start a nonprofit. What should I do? My first and always best answer is going to be to go find a nonprofit that is in the area that you're looking to start a nonprofit in. Go volunteer with them. Maybe go be on the board for them and understand how they work and they operate. Number one, you may find that you don't want to start a nonprofit and you just want to latch on to the organization that is already existing. But if you do want to start one, I think you can use that as an area to discover more, learn more about how they operate, and understand what challenges you may have ahead.
Yeah, that's great. The other thing is to talk to a lawyer. Always talk to a lawyer first. Our CEO is entirely focused on program level budgets and how we spend down each grant. I'd like to lead him toward asking more organization-wide specific questions. Can you suggest a couple key points I could bring up that would catch his interest? We're fortunate to have no cash flow issues. That's good. We have a client like this where the ED is just completely obsessed with every dollar and where it's being spent and how it belongs to each program or to each grant. One thing that helped her understand was that your final organization-wide financials are what you're sending out to funders most of the time. Yes, you're sending the individual grant budget, but they're also looking at your budget as a whole, at your audited financials, And so, there may be some key issues in there that funders, will look at, like functional expenses, or they might already be looking at how much your contract expenses are. And so kind of bringing it back to the theme she's focused on funders, but this is what funders are looking at. So we need to make sure, our bottom line is there. I think also, again, with the information of just, this is usually what goes on our website, this is what's out on GuideStar or Candid. And so, this is what, the public and the people we serve is looking at. And so while, yes, specifics are important, that big picture is also really important. I think also, even if they're focused, I think that's where that memo can come in, of just giving a brief executive summary, even if they don't ask for it, but just including it, and kind of touching on that when you're having your meeting, and kind of help reset the tone and the expectation.
And next I have one. Yeah, I have one here that's, as a finance committee member, how do I ask strong questions without getting into too much details? Since I'm an accounting professional, I feel like I'm asking detailed questions instead of oversight styled questions. I think this is a great point. So this is someone who obviously does understand financials and accounting and feels like they're getting in too much into the details. So I think the thing to step back here is put yourself in that oversight role. And instead of leading the questions with your own assumptions, start to have the finance team explain to you, just ask a general question of, hey, I see this variance here. Can you explain that? Or even that question about what is the thing, what is the top thing that I should be most looking at in the financials, and let them point you to it. You already have your own assumptions, but let them lead you to it. So asking those open-ended questions, I think, is a great way to take a step back.
All right, thank you all so much for your great questions and your feedback. It's wonderful being with you today. We hope you all have a great rest of your day. And as I said at the top of the hour, we hope you'll join us for our webinar next month, or check out some of our past webinars on YPTC. Thanks.
All right, thank you all.